Let me first ask you about the your expectations going forward. We see the trailing earnings did well, but what do you expect for the remaining quarter of the year?
You know, what we did this year is what we did this quarter is we've raised our guidance for sales. We believe we have strong momentum in our innovative medicines business, driven by Entresto and Cosentyx, our key growth drivers in cardiovascular disease and in immunology. We're seeing strong growth in our oncology portfolio. So when we looked at it, we really feel like now we're on a strong path and can raise that guidance for the full year, putting us in I think, a solid place entering into 2019 and future years.
So you think you've got that solid base then, Vas? Good morning to you. Can I ask about the deal you're doing then with Endocyte? You say it's got blockbuster potential. Give us some metrics around that. How big could this be?
Well, first, let me frame why we did this deal. We did this deal because I believe, and we believe as a company, we need to move into advanced therapy platforms. We've done that with our acquisition of Vivexis in gene therapy. We've done that through Kymriah, our cell therapy in cancer. Earlier this year, we entered radioligand therapy for oncology with the $4.4 billion acquisition of Advanced Accelerator Applications. And now we add Endocyte into that radioligand pillar. So I believe that will give us the global footprint, capability, and portfolio to really own the radioligand space into the future for the treatment of cancers. Now, importantly, specific to Endocyte, they have a phase 3 asset that is trying to work in metastatic prostate cancer, one of the largest fields within cancer treatment. And we believe this medicine has the potential to be on the market in 2021. We think, given its profile, if successful, could be a blockbuster. And we have hopes to even move it into earlier lines of cancer treatment for prostate cancer to enable it to grow further.
So what does that mean as far as the return on the investment you're making? When do you expect it to start sort of offsetting the amount that you're spending here, Vas?
Yeah, so the deal was a $2.1 billion deal, so right in our sweet spot of bolt-on acquisitions in platform technologies or in our core therapeutic areas, in this case, oncology and in the platform. We expect to have a solid IRR on this deal versus the amount that we paid. As I said, we expect at least a $1 billion sales asset out of it, and if we're able to move into earlier lines of therapy successfully, this could be a very attractive deal for us from a return profile. So we're very satisfied with the returns we think we can generate from the investment. We're also very happy that we could have an oncology launch in the next 3 years that will enable us to continue to grow our global oncology business. We're the #2 oncology company in the world today. So it's absolutely critical for us to fuel that pipeline in oncology so we have more launches in the coming years.
Can I ask you a little about pricing in the United States? There's a lot of pressure on companies to disclose pricing, make pricing more transparent, and to reduce pricing. President Trump yesterday said that Novartis and Pfizer cut prices when he called them. Is that the way it works, Vas?
You know, I can't comment on the specifics of what the administration said. What I can say is our decision in July to not increase prices was something that we took as a company. We believed it was appropriate given the changing policy environment we have right now in the U.S. I think what we really have to focus on is patient affordability. So how do we make medicines affordable at the pharmacy counter for patients? And that's going to take multiple stakeholders. It's not just the pharmaceutical industry. It's the pharmacy benefit managers, it's the insurers, and in some instances the hospitals, all have to work together to really focus on patient affordability. Now, we as a company need to ensure that when we price medicines, we price them based on the value they deliver to society. I believe deeply we have to be about value-based pricing, and then with that value-based access to the medicines. It's going to take us time to work through all of this, I think, with all of the stakeholders involved, but I believe in the medium term we can come to a more sustainable system in the United States.
What about the request for transparency, Vas? How do you feel about disclosing prices in television ads?
We're going to provide our comments directly to HHS on the recent announcement. I mean, we have, of course, no issue providing transparency. We just think we need to do that in a very thoughtful way, ensuring that patients have the right information to make the right decision. I mean, these are people, in our case, with heart failure or rheumatological illnesses. We need to ensure these patients have the right information to make the right decisions for their care in close collaboration, of course, primarily with their physician, who ultimately needs to make that decision. So open to transparency. I think we just really have to think about this from the patient perspective. We have to put ourselves in the shoes of the patient and say, are we doing something here that's going to help patients? And if we're doing that, then I think, of course, we're supportive.
Vas, back to the P&L a little bit. Is there opportunity to cut costs still over at the business? I mean, have you finished with job cuts, for example? You recently announced some reductions in Switzerland.
Yeah, we have committed to taking out $1 billion of costs out of our manufacturing, and we're on track to do that. Some of the recent announcements were completely in line with that plan, and we'll continue to execute that plan. What we're trying to do from a manufacturing standpoint is shift from a world where we had large volumes of chemically produced drugs to a world now where we have much smaller volumes of specialty drugs, but importantly, cell and gene therapy, much more personalized medicines that require a very different footprint. And so that's what we're working on the manufacturing side. We're also making a big streamlining within our business services organization. That's also, I think, a big element of our effort to really improve our margins. So taken together, I expect us to continue to work on taking costs out of the core P&L, getting our margins up to the mid-30s in innovative medicines, which is what I've committed to, and then continuing to drive that top-line growth through our innovative medicine launches to really put an attractive profile forward to investors.
Let me finally ask again about the cancer business, building that up with your acquisition, with the $2.1 billion acquisition of Endocyte. I think you made a $3.9 billion acquisition earlier this year, last year, advanced accelerator applications. And you said today that you're willing to continue making bolt-on acquisitions here. So how much more are you willing to spend, and is it mostly to continue building up your oncology business?
We will continue to look for bolt-on acquisitions. If you look at this year, we did, as you said, advanced accelerator applications. We're proposing Endocyte. We also did the $8.7 billion acquisition of Avexis in gene therapy. And we're going to continue to look in that range to find, are there opportunities to build up in our core therapeutic areas, so oncology, but also in immunology. Of course, we're in cardiovascular disease, ophthalmology. I mean, those core therapeutic areas, we know we need depth in order to be successful in terms of our pipeline and our product portfolio. And as I said earlier, I'm deeply committed to building up our capabilities in cell therapies, gene therapies, and radioligand therapies. So if we can find opportunities to increase our scale in those three areas, we'll do that as well.